Yo, guys, the Fed said a couple days ago that they plan on doing a couple more interest rate hikes, and all the interest rate sensitive stocks started to tank, and those include the REITs. So, today we're going to be going over a couple REITs that are at great valuations right now, and I'm going to be showing you the financials and telling you why they're at good deals right now. And so, yeah, hope you guys will join me today as we look at four REITs that are at super great deals right now. And if you enjoy this stuff, please hit that like button for me, and let's go ahead and get straight into it. Alright guys, so for the first stock on the list, it is ticker symbol ADC or Agree Realty Trust. Right now they're at a market cap of $5.48 billion and they're yielding 5.12%. But more importantly, look at the stock price of this. It is actually at a great deal right now, trading near those 2020 lows. And so I'm going to be digging into the financials and showing you why they're at a great valuation right now. All right, so we're going to be showing you the juicy numbers here. So net income of $41 million in the most recent quarter, up 13% from 1 year ago. But more importantly, look at their assets versus liabilities. They're at very low leveraged for a REIT, very low, 31%. And it's down from 1 year ago. Last year it was 34%. Now they have more assets and less debt on a ratio basis. So more importantly though, we want to look at their core FFO, and this is the number they pay out their dividend with. So it is 89 million in the most recent quarter, and let's see how much their dividend cost them. So their dividend actually only cost them $69 million. So obviously they have tons of room to grow that, which is really cool to see. So yeah, that was Agree Realty Corp. I really like this one for the low debt, and they can easily raise the dividend if they wanted to. So I really like this one. And let's go ahead and get into the next dividend stock. All right, so the next REIT on the list is the largest REIT by market cap, $105 billion. And look at this, it's trading at it just broke under its support level. So this one's actually a really great deal in my opinion. It trades at a yield of 3.05%. And for this REIT, that's really good. So let's go ahead and show you the finances of this one. So net income of 1.28 billion, but more importantly, assets versus liabilities. I love REITs with low debt, and Prologis, and just like Agree Realty, this one has very low debt of only 37% assets to liabilities. And here's the number we really want to look at, the core FFO of 1.22 billion. How much does their dividend cost them? Let's see. Well, it only cost them $807 million, and obviously they have room to grow that if they wanted to. And here's the dividend growth for Prologis. So at 2020, it was 58 cents. Now it's 87 cents. And remember, REITs got to pay out the 90% of their taxable income. So it's pretty cool to see. This one's trading at a great deal right now. And let's go ahead and look at what the next REIT is. Yo guys, so the next REIT on the list is at a super good deal right now in my opinion. Remember, none of this is financial advice, but this is Extra Space Storage at a market cap of $26 billion. Remember, if y'all want to use either app that I'm using in this video, links are in the description. But right now, they have 86% of the revenue from the self-storage, and then they actually have their own tenant insurance. And if we look at the revenue estimates and the EBITDA estimates, as you can see, they're going up like crazy because they just acquired Life Storage, which is over $5 to $10 billion company, same industry, same self-storage, and they're going to actually be able to sell their own tenant insurance to these people now, and they're going to have synergies of over a couple $100 million in my opinion that analysts aren't expecting. So that's why, look at the analysts already expectations, the EBITDA and the revenue plan to go up like crazy. Now I'm going to show you a couple of the stats of this company and show you how they can easily afford their dividends. So here's their core FFO of $347 million. And this one is really interest rate sensitive. So the number did go down from 1 year ago. But if we go to their total cash paid, it only cost their dividend $218 million. So they have tons of room to grow this, over a couple $100 million. And what's really cool is if we go to their total common shares outstanding, unlike other REITs, they don't dilute the shareholders basically at all. 1 year ago, it was 133.9 million. Now it's 135 million. So it's very cool to see that REITs like this one right here isn't doing much dilution, and it's at a great deal right now. This one was one of the fastest growers during this 0% interest rates. It went from $100 all the way up to $205. It was pretty crazy. And yeah, that's Extra Space Storage. All right, guys, and for the fourth REIT on this list, it is actually American Tower Corp, and I love this REIT so much, and I'm definitely buying this stock next week. Look at this. So this one used to be one of the largest market cap ones. It used to be competing with Prologis. They used to have the same market cap. Now American Tower Corp is cheaper by a lot. They're only a market cap of $77 billion, yielding 3.9%. And let me show you the dividend growth of this company because it's some of the best you've ever seen. They almost raised their dividend every single quarter. Look, 2020 was $1.08. Now it's $1.57. And the financials are even better. Look at this. The core FFO, the number you want to look at, $1.21 billion, up from 1 year ago. How much does the dividend cost them? Only $727 million. So they can easily afford that. And if we go to the total common shares outstanding, they haven't been diluting shareholders basically at all. 1 year ago it was 465, now it's 466. So basically no shareholder dilution. That's why I really love American Tower Corp. And that's why it's trading at literally its 52-week low, almost multi-year low. It's trading, they're basically saying it's at the same risks as the peak fear of the pandemic for this company. So this one I'm definitely picking up next week. It's a huge dividend growth stock. So hey, you can't go wrong getting it at these very cheap valuations right now. And I'm actually going to show you a bonus REIT that I would consider buying. I'll be quick about it, but let's check it out. Yo guys, so for the bonus REIT I wanted to show you is ticker symbol MAA, or Mid-American Apartments. And right now they're trading at a market cap of 15 billion, yielding 4.3%. And if we look at the stock price right now, just like the other stocks, they're at very great deals right now. And of course, I'm going to show you guys the number. But I just want to say, if y'all like how I break down the numbers, I really would appreciate if you hit that like button and subscribe if you're new, because we're trying to get to 1,000 subscribers. And if you look at the number, we're getting pretty close. And yeah, so they're trading at a dividend yield of 4.3% right now. And if we look at the dividend growth, they're going to raise it in 2 quarters from now. It went from literally in 2020 from $1 to $1.40. So that's 40% dividend growth. But more importantly, they're kind of low leveraged, only at 44%, down in a ratio basis from 1 year ago. And if we look at their core FFO from 1 year ago, it's also grown. So they've had better margins. And right now it's at $335 million. Let's see how much their dividend cost them. It only cost them $164 million. So they have a lot of room to grow that. They could almost double it if they wanted to. That's why the dividend growth is so huge on this company. And if we go look at the total common shares outstanding, they basically haven't been diluting shareholders at all. Went from 115 to 116. So yeah, hope you guys enjoyed this video. Again, please hit that subscribe button, trying to get to 1,000 subscribers. Also, check out my previous 2 videos. See why Dollar General and Dollar Tree is about to go bankrupt, possibly. Check out the video. I thought it was really cool, and hope you guys have a great rest of your day.